Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, May 19th, 2011. Now, this morning I'm talking about the Japanese recession. Now, overnight they reported GDP figures in Japan, and for the second straight quarter, GDP is declining, so technically that means that Japan's in recession. However, we know that Japan's sort of been muddling around for the last 20 years or so. They've been mired in this deflationary environment, and they've had slow growth when they did have growth, little to no inflation, and the economy's just sort of been chugging along, albeit very slowly. So we can see here yesterday, dollar yen came down and it tested 81, but here we are back up. We've got the yen weakening. Now, GDP figures came in much worse than expected. Okay, they were expecting a quarterly decline of 0.5%. They got the quarterly decline of 0.9%, which means the annualized figure goes from a negative 1.9% to a negative 3.7%. So, that's showing a decline. But we obviously know some of the problems that they had in Japan. All right, let's talk about the earthquake, tsunami, nuclear crisis, what have you. But there is some hope that perhaps the rebuilding process from this disaster is going to help add to GDP, okay, because that's going to increase economic activity as people are cleaning up, rebuilding, things of that nature. So we've got Japanese yen weakness across the board. We had the yen lower, the Nikkei lower overnight, but we've got other stock indices higher this morning. I just want to show you the pound here real quick. Now, in the UK, we talked yesterday about the Bank of England minutes, okay, but we also came in and they had retail sales figures that came in much better than expected. So they showed a gain of 1.2% versus 0.8%. That was the ex-auto fuel, and then the year-over-year number got pushed up to 2.7% from the expectation of 2.2%. So it shows you that the consumer is still alive in the UK. Now, one of the Bank of England's major problems is that they're concerned about raising interest rates in a falling GDP environment. But if we think about what goes into GDP, let's just think about this for a second. It's personal consumption, investment, government spending, all right, and then net exports. Well, you know that you're going to have an austerity program where government spending is going to decline. So right there, you can automatically say we know that one of the four components are going to shrink. So it's not a big surprise to have declining GDP if the numbers are declining from government spending. Perhaps these guys need to sort of just look, push that aside for a moment and say, well, wait a second, what are the other three sectors doing? Are they gaining? Are they shrinking? How bad is it going to be? And if it just turns out to be, well, it's just the government spending component, then guess what? That's okay, because that's what they're trying to do. You're trying to get your government house in order. Okay, so I mentioned the policies yesterday going on. How this is encouraging stagflation by having these low interest rates. Well, looks like the market's caught up with us. Commodities are back higher. Actually, gold's a little bit flat today, but oil's back up over 100. Gold was up over 1,500 yesterday. We've got the ags much higher, and actually some of this has to do with actual supply and demand. Imagine that. It's not just weak U.S. monetary policy, but because of the flooding. There's been some flooding in the Midwest here in the U.S., which is a huge part of the agricultural belt. All right, and there's also been a drought in France that's contributed to a scarcity of supply for some of these commodities. And we know about the insatiable demand going on around the globe. All right, so now everything's shifting from, well, this was a weak dollar story to a just a supply-demand story. Well, guess what? That makes sense and that's true, all right, but I don't think demand is going to shift based on what the prices are. So, for example, if we had higher interest rates here in the U.S., yes, there'd still be demand for these products, only they would cost a lot less. And I think that's where everybody's sort of missing the boat, okay, because it's we're trying to encourage inflation. Bernanke would love to see inflation. All right, he's got this problem with housing prices that are falling, people not buying homes. Now we're going to get later this morning, all right, we're going to get the U.S. existing home sales figures that come out, and they're expecting 5.2 million, and I don't think we're going to see that number. Also later this morning, we're going to see the Philly Fed, which is going to show us some of the manufacturing activity in the Philadelphia region, which is sometimes a decent indicator of what's going on. And then we also have U.S. initial jobless claims, which, the expectation is now back up well into the 400s. We're expecting an additional 420,000 people to have lost their jobs last week. So we're going to see what happens there. But you can see here, Euro, USD, just sort of flat. All right, we're testing this 143 area, and depending upon, I think, what happens with these 830 numbers, we're going to see how that goes through. But another news from the Eurozone is IMF head Dominique Strauss-Kahn finally has resigned from his post there. So, that's seen as a good thing, but now there's going to be a little bit of uncertainty as they try and figure out who's going to be next. Apparently, Christine Lagarde from France is one of the leading candidates. Would be the first time a woman was elected to that post. So, we'll have to see what happens there. But we've got Japanese yen weakness. We have commodities stronger, so we know what that means. Commodity currencies going higher. Okay, Australia is up. We've got New Zealand up. Now, in Australia, the consumer inflation expectation came in a little bit less than last time around, so that wasn't too bad. And then also in New Zealand, they had a set of a better than expected budget projections. So that's kind of what we're looking at today. There's really no news out for the euro today, so expect it to trade on anti-dollar sentiment. Just touch back on that today. We're going to have Jean-Claude Trichet is going to be speaking on the European economy, so depending upon what he says, there could be something happening. All right, we also have some speech from Bank of Canada. All right, we're going to get Bank of Canada Governor Carney speaking as well, and then we're going to get their Bank of Canada review release. So it looks like dollar strengthening here a bit against CAD, even though we've got a little bit of oil strength here. All right, perhaps this 96.50 level will act as support. Looks like we're getting a little bit oversold, so we may get a bounce there as well. So that's what we're looking at today, folks. Japan, they've got the interest rate decision tomorrow. That could be a good time to potentially add further monetary easing to the process, or they may just sit back and say, well, nothing. We can't do anything at this point. We just need to take the time to let it unfold. So that's going to be interesting this evening going forward. And then just keep an eye on that U.S. existing home sales and the initial jobless claims this morning. So that's what I've got, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.